Welcome to Crypto Jargon. In this episode, I break down the terms pump and dump, Bagholder, capitulation, and volatility in relation to cryptocurrency trading. Let's start with what do we mean by volatility? You've surely heard it many times already that cryptocurrencies are very volatile. This refers to instability in their prices. Cryptocurrencies can experience significant price variations in short periods of time. On many occasions, their value can change by 100 or 200% and even more than 400% in a single day, with the exception of stable coins, of course. But this is also the appeal of this new asset class to investors and especially to the speculators who trade them on exchanges. Hence, a sudden increase of the price of significant levels is known as a pump. It can be a result of advancements and development of the tech of a coin or major events such as big exchange listing, a change in the protocol, halving, a hard fork, and many others, which brings a lot of attention from buyers who rush into a buying frenzy and the prices shoot up. But this could also be a coordinated effort to increase the price artificially for purely speculative purpose. So during a pump, digital assets can jump in value exponentially by a few 100% in a single day or even just in hours. The faster this process occurs, the more it signals for manipulation, and in such cases it is often followed by a sudden drop, a process that can occur even faster, and it's known as a dump. This is when the selling pressure overpowers the buyers and supply becomes disproportionate to the demand, crushing the prices to the previous lows or even worse. The two events are often interlinked, and this is what we mean by a pump and dump. In fact, most of the pump and dumps in crypto are a result of coordinated efforts by groups or individuals with malicious purpose of falsely inflating prices of a coin for personal gains. This is a practice that is illegal in traditional stock markets, but it's still largely popular in the crypto space. Such is the case with the flash pump and dump, which happens ultra fast and lasts a very short period, typically within a few minutes. And it is organized by pump and dump groups that thrive on Telegram, Slack, and other online channels. These are groups of traders who invest heavily in a cryptocurrency at a very low price level and then publicize it aggressively, often using misleading or outright false statements to get other investors interested and drive the price upward. Once that happens and the prices are shooting up, the group sells off their coins in bulk, which results in a profit for them, but it creates a huge drop in the coin's value due to other traders panicking about the falling prices and selling off their positions as fast as they can. We call this the ripple effect, and it catches on really quickly and it creates a huge dump. After this event, the price usually retracts to previous lows or even below, and it creates many bagholders. A bagholder, one word. It's a term describing an investor who holds a large amount of a coin that has decreased in value so much it has become worthless. It is often used for those who bought during high peaks but held on to their coins for too long, resulting in losses when the currencies became crumbling down. Eventually, they might give up on their hope for recovery of their investment and capitulate. Capitulation. This is to sell off at a loss, a closure or a period of strong selling activity where investors give up their positions and sell off their holdings. It can be referred to as panic selling because during a period of capitulation, sell orders peak at a much higher than average level, which quickly drives the asset price lower and lower in a frantic manner. Capitulation can be described as the moment when investors lose hope, accepting losses, and giving up on their previous gains. When the panic selling period is over, marking the end of the capitulation, it may be followed by either a consolidation, which is a sideways movement period, or even by an upward trend that would potentially indicate the beginning of another bull market. As you know, markets go in cycles, and it is not unusual for coins to lose up to 90% of their value during a period of a bear market and gain it all back again during the next bull market. Bull market and bear market are terms that were covered in another episode of Crypto Jargon, so take a look in the description of this video where you will find the link to that one. Enjoying this content? Go check out Crypto Jargon, the ebook, out now on Kindle. It's an Amazon bestseller and it's the most up-to-date crypto dictionary with more than 700 terms, acronyms and trading slang related to cryptocurrencies and blockchain tech. Just go to ojjordan.com/cryptojargon and grab your digital copy today.